Large caps aid a late recovery for the markets. Key indices closed flat, but broader markets continue to be under pressure. IT and oil and gas gain. Financials, pharma and real estate as a sector lag.
MFI stocks like Credit Access Grameen and Spandana Spurti surge. CNBC TV18 learns that the Department of Financial Services is holding a series of consultative meetings between January 7 to January 16 with fintech as well as MFI players to understand issues faced by the industry and seek their feedback.
Electronics manufacturing service providers Dixon Tech, Keynes Technologies, Amber slump on fears of increased competition. CCI approves Tata Electronics' majority stake buy in Pegatron India, a move positive for the Tata Group as it aims to scale its EMS offerings. Hello and welcome to a fresh new edition of Markets Forward. Today, of course, was a seesaw kind of a day. I mean, big swoon through the course of the session and then a recovery. We'll, of course, get you everything you need to know as you prepare for the next trading session. I'm Prashant. With me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Well, we started with not the best of cues, right? Global markets were in a bit of a funk as well. Again, worries around whether interest rates are going to be cut in the US or not. But there was that sort of midday recovery we managed to come through. We'll get you a lot of the corporate highlights, all the events that transpired today, plus all that we have to watch tomorrow. First up, quick stock taking of the roller coaster.
I think we broke the lows, actually.
The Monday lows were also being challenged in today's fall.
So both the Nifty and the Bank Nifty broke the lows of Monday, which are the recent lows, essentially. But then there was a recovery which set in, and we ended actually still looking a little tricky for the Nifty Bank especially. It's barely, 60, 70 points on a 50,000 index. You're precariously close to those lows of Monday. And the problem is once you break those lows, I mean, you kind of, the market will, it's, as they say, gains beget gains and sometimes losses bring more losses. And I think you get into that kind of a loop. So it's important that the lows which we made today now, because those are fresh lows, hold and we don't revisit it, and there is some kind of a base formation which starts to happen. A lot of technical opinion out there is still a little on the bearish, a little on the cautious side, and the mood is to try and sell the rallies and things like that. On the fundamental side, it's a little better, with most saying maybe we've already corrected a fair bit from the highs, and there is this is a base building kind of a phase. Now, one of the stocks which will be important for all of this is, of course, Reliance Industries, right? The recent low was 1,200. It's come up about 6% from those lows as of today's close. And today itself, it added about 35 index points to what the Nifty did. The number two sort of contributor was TCS. The number three was ITC. Between the three, you basically had this recovery which you saw today. Broader markets is another story. It's not seen as much pain as some of the large cap stocks have seen. They're okay. Yesterday, the mid-cap and small-cap indices were up 1%, outperforming. Today, they underperformed even as the large-cap indices came up a little bit, really speaking. Amidst all of this, I mean, the US market is, of course, also important. We've got to keep an eye there as we are getting closer and closer to the Trump inauguration. Soundbite, tweets, posts on Truth Social. I mean, I think all of those coming our way thick and fast as well. Surabhi.
Okay, all right. That's the day that sort of transpired. It was actually thanks to this oil and gas-led recovery that we managed to at least get to the flat line on the Nifty. It was Reliance and actually also ONGC, second day running, big move on that stock. So those were the two sort of pillars. Aside of that, some of the IT stocks were getting excited. The earnings season is kicking off with TCS tomorrow. So there was some buying there that kind of helped matters as well. But what didn't work, obviously, were banks. A lot of the large cap banks were weak. And it wasn't just actually private sector names, even PSU banks. That index was also down. Both of these indices were down between 0.75% to almost 1% today. So these are the weak areas. And the other weak pockets included consumer durables, some of the high-flying electronics manufacturers, some healthcare and pharma stocks also. Fairly indifferent to weak today. So that was the construct and the nature. But the bigger issue is the mid-cap market, because the mid-cap market has again underperformed the large-cap space. The advance decline ratio hasn't been the most healthiest. And the mid-cap index has gone home with a fair amount of loss today, down about 1%. That's the advanced decline ratio, not looking too great on the broader market. But let's move on and tell you what we're covering on the show. So here's the lineup. We'll, of course, get you the key movers and shakers with Vivek in just a bit. Paytm is in focus after NPCI's data reveals that the company perhaps has not gained too much of market share in UPI payments in December. Electronics manufacturing firms like Dixon Tech, Keynes, all of them were down today. We'll tell you why in just a bit. And, of course, plenty of events to watch, including the start of the earnings season. So more on that as we go forward. But first, let's look at the individual level stock action today. Over to Vivek for that.
Well, good afternoon. What a rally that we saw in the second half of the trading session, and that made the bet a lot better than what it was, at the initial half of the session. The list of gainers, quite a long list today. First on the list has to be Reliance Industries, almost 2% higher. Very strong brokerage notes coming in. A lot of value unlocking, something that they are looking at, and they started giving and ascribing value to. The second set of stocks that did quite well, something that you alluded to earlier, is the entire IT pack. LTIMindtree, one of the top gainers. TCS, seeing quite a bit of a sharp recovery after the underperformance in the week gone by, and almost going in 2% higher as far as the results tomorrow are concerned. The FMCG set of stocks, something that have underperformed quite significantly today, all of them saw a minor rebound, especially in the second half of the trading session, while a few stocks just saw 0.5% or 1% gain, but all of them rebounded quite sharply from the day's lowest point. And another set of stocks that did quite well was the entire MFI pack, or the microfinance institutions. Within that, Spandana Spurti today up 19%, and this particular stock has been up for 3 to 4 sessions continuously. It's been a strong mover. But quite a long list of losers as well. Paytm, one of the top laggards as far as the FNO space was concerned. UBS note indicating that no market share gains that the company has seen as far as NPCI is concerned is something that led to quite a bit of a sell-off. Pharma stocks today, after a while, saw quite a bit of profit booking. Names like Lupin, Zydus Life, all of these stocks ended lower for the session. Soba, slightly muted operational update coming from the company. That particular stock too ended lower today. And United Breweries, this particular stock saw a very, very volatile session, especially in the last hour. But Telangana beer volumes would get impacted, and this is something that the street didn't like, almost down 4%. And lastly, Dixon Tech, in the broader end of the market, NSE 500, one of the top laggards. You'll get to hear more about that, but almost 8% lower on the NSE 500 index.
All right, lots of movers and shakers, more down than up in the broader market, as we've been saying. Vivek, thank you for that. Mayuresh Joshi, William O'Neill is with us. Srikanth Chauhan of Kotak is also with us. Thanks for joining in. Srikanth, quick near-term view markets. I mean, we managed a close above Monday's lows after making fresh lows. Where is it headed?
Yeah. Good evening, Prashant. Good evening, Surbhi. I think, markets are forming some higher, I can say the narrow range sort of formation. And since morning, if you see the pattern, then there was good amount of buying interest in large cap companies like ITC, Reliance, a few FMCG companies, and all these NBFCs, especially diversified financials. They did well. They recovered from their lows, and the gains were much better than anyone's expectations. I think such type of formations always helps the market to recover in the second half or to rally in the near term. That is what that I observed in the past. And today, when the market was going down, there was fear that the market may even break the level of 23,500 in today's date. But that has not happened. And I think before that only we saw good amount of profit taking or maybe liquidation in mid cap and small cap stocks. So the way market recovered in the second half and it closed very nearer to the highest point of the day, I am of the view that maybe in next 1 or 2 days, we are going to see the levels of 24,000 again. And today's low, it's definitely important for the market. In case if we see the market is breaking to the same in tomorrow's date, then the market may even fall to the levels of 23,200. But the way it recovered today, I am of the view that the markets are heading towards 24,000.
24,000. So maybe some more steam left in this recovery, in this pullback. Got that, Srikanth. Tastian, we'll just have more questions in a bit. Let's move on to the stock-specific action. Now, shares of Paytm plunged almost 8% today after a UBS note highlighted that the company has failed to gain market share in UPI transactions in December. This is as per NPCI data. Abhishek has been looking at this. Abhishek, what are the details?
While UBS has written on Paytm, they have a neutral rating with a target price of 1,000 per share. They say that the NPCI data indicates no share gain for Paytm in last 3 months or more. The market share over there for UPI has been stagnant at about 5.5%. So this is versus 10% that they had in Jan of 2024. It was 5.5% for October and November as well. This indicates that Paytm has not seen material MTU addition in December. So Paytm MTU, that is monthly transaction users, they have actually fallen from as high as 100 million that they had in Jan of 24 to around 68 million in September of 24. So MTU increase is very important given the fact that B2C offerings do depend on them. Back to you.
Abhishek, thank you very much for that. I mean, 350 to 1,000, 1,000 to 900. So, you know, a few takers at 350, but lots of takers at $1,000. That's what the market does. Mayuresh, any thoughts? Paytm?
You said it yourself, Prashant. I think that is what the market does, right? But I think the price is probably gestating a lot of positives that the street is probably believing in. And therefore, I think the expectations in terms of whatever happened a few quarters back with the regulatory clampdown, so on and so forth, the changes that they've done, partial approvals that they've probably got, all hinted to a strong price action over the past few months. But now the street would want to believe how numbers will actually play out. And that will be the proof of the pudding and the real test for Paytm. So I think numbers are coming through in this quarter, in the coming quarter as well. I think there might be a good base case scenario getting built in for a re-rating of the stock. In my opinion, I think the stock will consolidate and will largely look forward for the numbers for a re-rating aspect going forward.
Okay, that's Paytm. But let's go back to Abhishek to talk about this whole MFI rally that was playing out today. Big move in stocks like Spandana Spurti, Credit Access Grameen, and several more. Abhishek, what are you picking up?
Sources do indicate that, Department of Financial Services will be holding a consultative meeting along with, banks, MFIs, etc. Between Jan of 7 to Jan of 16. So this meeting is with fintechs, MFI and various other lenders. This is being done to understand the issues as well as industry feedback as to what is happening in each of these segments. So Alok Mishra, CEO of MFin, will be attending the consultative meetings over here, and top 10 MFI players as per our sources will be attending this meeting as well. The key area of focus for the MFI players would be around easier repayment schedule of the borrowers. They are facing issues with respect to repayments being done under the current classification norm, so they want an extension with respect to repayment schedule and make funds available for the sector at a lower rate. So they want some kind of relief from the government with respect to funding being available at cheaper rates to them. That is what I have picked up. But we need to see how much of this will get translated or get approved by the FinMin, given the fact that, this time the issue is on their own. That is over leveraging of customer and not any other natural calamity like floods, earthquake, etc. Back to you.
All right, Abhishek, thanks very much. Shrikant, let me ask you about these stocks. I mean, we'll have to see if there's any real news, like Abhishek is pointing out, if anything fundamentally is changing for them in terms of regulation. But purely looking at the charts and looking at the major song and dance today in stocks like Credit Access, what do you notice? Do you see any long trades here? What's the advice on some of these MFIs and the small finance lenders?
Yeah, I think like all these stocks are available at their previous lows and in fact long-term lows. So Spandana Spurti was somewhere quoting at the levels of 300, 350 some few months back. I mean to say in the year 2022-23, the lowest point was around 300, 350. From there, all the way the stock moved to 1200 and now it is again back to the same levels. And the way there are volumes, I am of the view that all these stocks like Fusion, Micro, or even I can say Credit Access and Spandana Spurti, they all are going to gain from here. We are going to see a very strong pullback in the near term. That's my view. And currently, if we just consider the overall formation, then from here also we could see the levels of maybe 10-15% higher. So in case if there is any correction in next 1 or 2 days of time, I think we should look for adding them because the volumes are like really remarkable, and even the delivery based volume of last 2 days are also like encouraging.
Okay, all right. So that's EMS, right? The MFI companies. EMS as a space, right, came under pressure. Dixon fell sharply. Keynes was down sharply. And others also saw some selling pressure, CG Power, etc. Now, the talk was that this is on account of increased expected competition. The news was Tata Electronics securing a nod for acquisition of Pegatron Technology India. Upasana is here to tell us why this is being seen as increasing competition in this space. Upasana, over to you.
Well, certainly, CCI has approved Tata Electronic acquisition of a majority stake in Pegatron Technology India. Tata Electronics will transfer component business to Pegatron India. Now, let us understand what Pegatron India exactly does. This company is a subsidiary of Pegatron Corporation, and Pegatron India is engaged in provision of electronic manufacturing services for smartphones like Apple Inc. and exports products to countries like North America, Asia and Europe. Now, one of the notable development previously is when Tata Electronic had acquired iPhone unit of Taiwanese company named as Wistron in Bangalore for $125 million in November 2023. Well, on back of this development, we are seeing all the EMS stocks under pressure, mainly due to competitive pressure. Now, looking at the valuation, Keynes Tech tops the list. Highly expensive stands at 97 times, followed by Dixon, which stands at around 90 times. CG Power stands at 72 times, and Syrma SGS is one of the cheapest in the basket with a valuation of 45.7 times. Hence, all these stocks continue to remain in focus on back of this development.
Got that. Mayuresh, again, it's only a question of what is gone up 3 times, 5 times, 10 times. Yeah. Dixon was 6 months back was at less than 10,000. High was 20,000. Now it's 16 and change. What are your thoughts here? Dixon or any of the other names? Anything you'd recommend fresh purchases in, or do you think it's time to book profits?
No fresh purchases, Prashant, because they're way too expensive at this juncture. And it's a welcome sign. I think if they correct, I think that will bring an opportunity. I think if there is some sort of a healthy correction coming through. But again, I think in lieu of competition, and if the stocks have corrected because of that, I think there is ample space for the EMS players. I think the entire market is going to go fourfold, from a 20 billion market to an 80 billion market over the next 7 to 8 years. Having said that, the PLI schemes, the backward integration that a lot of these players are doing to probably strengthen their supply chains. China plus one is a huge reality. I think there are a lot of players in Europe, in America that are probably wanting diverse vendors, diverse suppliers as well. And this fitment actually augurs well. Let's not forget the new areas like semiconductors, which can be a huge value addition going forward as well. And the ODM part of the market, which has relatively better margins, which can get played out over the next few quarters. So in my opinion, again, I think if the corrections do come through, I think it's a welcome sign. Valuations way too expensive for fresh investments. We continue holding, as I said, stocks like Dixon, stocks like Avalon, both in our domestic and global portfolios. Our belief is that the space might perform well over a longer period of time, but fresh investments have to be taken at lower levels. We have both these stocks as a clear disclaimer at way lower levels than where they are in this.
Okay, all right, gentlemen. Thanks very much for that. Good to have your opinion and advice on the show. Thanks for joining in. We do need to take a very quick break. We'll come back on the other side and get you the top corporate voices that we had on the channel today and the big events to watch out for tomorrow. All right, welcome back. Let's now look at the chatter that Nimesh picked up from the street today. It was another very volatile session. So let's ask him what's been going on. Nimesh, what did you hear on the market and, of course, about individual stocks?
Well, there will be a sharp recovery in the Nifty thanks to support from large cap names like Reliance, ITC and large cap IT. But it was a broader market which was under pressure. The index ended 1% lower and a lot of the fresh F&O entrants ended 6, 8, 10% lower. So there was a pain in the broader market stocks. In terms of individual names, the first stock is Poonawalla Finance. That stock sharply recovered from the day's low after a large block. 60 lakh shares got changed hands. I understand it was a clean-out trade where a domestic mutual fund completely sold out. So that's the first name. Second stock is Jayakumar Infra. Again, that stock was buzzing on large volumes. In a weakish broader market, that stock ended in the green. And I understand a leading domestic AIF has been active buyer of late in Jayakumar Infra. Third, couple of stocks where there was delivery-based buying, NMDC as well as Indus Tower. While the stock has been consolidating, there has been FI interest in both those names, and there was delivery buying as well in today's market. And the last is IIFL Finance. That stock ended at day's high, recovered sharply from the intraday lows in today's market. The volumes were on the higher side, and the city is anticipating a corporate development as well in IIFL Finance very soon.
Thank you very much. IIFL, big laggard, but starting to show signs of life right now. Nimesh, thank you very much for that. So that's the chatter that Nimesh is picking up. So some corporate commentary now that we picked up through the course of the day. We had, Nuvoco, the management join us after a couple of years actually. The building materials division of the Nirma Group is all set to acquire Vadraj Cement via the insolvency route. Management said the deal was closed at approximately 2,800 to 3,000 crores, which translates to an enterprise value of $65 per ton. They added there are synergy benefits from this acquisition. They also told us that cement prices have bottomed out and profitability is expected to improve going forward. Clarified the company is not on the block.
Mahindra Logistics maintains its mid-teen volume growth target driven by new contracts and steady growth in existing accounts. The management says quick commerce and grocery remain standout growth areas for the company. Also, it is confident of reaching 10,000 crore rupees in revenue by FY26. And in some more management commentary, Kalyan Jewellers was under pressure in trade a day after reporting its third quarter update. Earlier in the day, the executive director, Ramesh Kalyanaraman, said that the jewelry player expects the growth momentum to continue. Listen in.
We have been consistently performing over the past many quarters, as you rightly said. And we don't see any change in momentum suddenly coming in the near future because our expansion plan is on track. Again, Q4 expansion is also on track. The momentum in Q3 was extremely high, huge festive demand. Again, the number of wedding days are more in the second half of the financial year when compared to the last year. So we don't see anything changing overnight.
Okay, Kalyan taking a bit of a knock, but stocks been an absolute stellar performer. Before we wrap, let's get you a quick list of things to watch out for as we come back tomorrow. Vinny standing by with that. Vinny, over to you.
So in terms of global events, key events to watch out for, yes, we'll have the Fed's minutes that will be coming out tonight. So that will be carry forward, and that's what we'll be seeing a reaction to. Other than that, tomorrow US markets are going to be short. So keep an eye on that. There's going to be a funeral for the former President Jimmy Carter. So keep an eye on that one. In the Eurozone, we're watching out for the retail sales data. Keep an eye on that one. China, we are watching out for the CPI as well as the PPI data. Important data points coming in there. So that is what we're watching out in the global commentary front. India market and the domestic market, earnings season is just starting off. So we'll keep an eye on earnings coming in from the Nifty front. We have TCS, and other than that, important ones are IREDA as well as Tata Elxsi. Keep an eye on those earnings starting tomorrow. And other cues coming in for the Indian markets, weekly expiry for the Nifty as well as the Amphi data are key factors to watch out for.
All right, sounds like a busy day. Vinny, thank you so much for that. So Prashant, are you ready? Earnings starting, the Trump inauguration, the budget coming up. Are you strapped up and ready?
I think we should start. I was thinking we should start a program in the evening, maybe, sort of recapping all the tweets of the day. You know, because I think there is enough to do a full program between Elon Musk and Donald Trump, and so it's going to be interesting next 4 years. Of course. It's already interesting. It's not even inauguration, which is, of course, on the 20th of January. Well, we'll, of course, wrap up things on this edition of Markets Forward. From all of us here, goodbye. But more news and updates continue on the other side. Stay tuned.